Hi, this is James Shrug with Westpac London's end of day report for Wednesday the 1st of May. Well, a lot of Europe was closed today for the May Day holiday, but there were still some economic news reports to note, particularly out of the US, most of them weak too, with the ISM factory index for the month of April coming in at 50.7, down from 51.3 in March. That's the lowest reading for the year so far. Construction spending fell 1.7% in March. That was unexpectedly steep. The ADP measure of private payrolls, which typically comes out 2 days before the official monthly jobs report for the US, it showed a rise of 119,000 jobs in April, against expectations of a somewhat larger gain, around 150,000. And that's increased speculation that Friday's jobs report might be a little bit softer, although the two series don't always track well together. The other news, of course, was the US Federal Reserve put out its latest statement. They kept their very accommodative policy stance in place, just minor tweaks to the language of the statement. They sounded a little bit more cautious about the labour market and a little bit more emphatic about the impact of fiscal policy on the economy. They also made it explicit that and I'll read it to you actually, the committee is prepared to increase or reduce the pace of its purchases to maintain appropriate policy accommodation as the outlook for the labour market and inflation evolves or changes. They didn't have that in the last statement, so whereas previously it seemed that some market participants were inferring from the statement that the next move in policy would be a tightening, i.e. less accommodation, a slower pace of asset purchases. The Fed is saying here that it could be either more or less. So trying, it seems, to leave the options, their options fully open. And in the UK we had a slightly less weak factory PMI survey today as well. So that's the main news for today. Markets, as I say, closed across the continent, but the FTSE in London was up 1/3%, and at the moment the Dow, in contrast, is down around 0.5%. It's about 8:30 p.m. Yeah, that's right, p.m. in London at the moment. The level of the Dow is 14,757. Commodity markets have taken a bit of a dump today, with copper prices down 3.4%. The oil price is down 2.5% at $91.07 a barrel. Gold's down 1% at $1,457 an ounce, and the Aussie dollar's taken a bit of a hit too. Pretty much during the London afternoon, it fell from over 1.035 to just under 1.03 against the US dollar. The initial trigger for that was the weaker ADP report, and then the subsequent softer data on the US economy. We've got Aussie export and import price figures and some building data coming out on Thursday, and then of the all-important European Central Bank decision Thursday my time, Thursday night if you're watching in Australia, where there's a pretty good pretty decent likelihood that they might even cut rates. Our view has been they'll cut rates for some time now, but we were sort of thinking more like the end of the June quarter rather than as soon as this month, but we'll find out tomorrow. And if they cut rates, they could also put in place, or at least signal, further policy initiatives as well. So that's what markets are hoping for and looking for, so that's probably the main event to watch for tomorrow, and I'll be here to report it hopefully a little bit earlier than today.